Alright, so in front of you, you're having the Nasdaq E-mini futures, the December contract, the final hour trading of Monday 6th October. So as you know, I did a video about the opening bell New York AM session trading. So this is the PM session, but specifically going into the final hour from 3 going into the market closure at 4. I say market closure at 4 because after 4 going into 4:15, that is just a consolidation, so the actual move ends at 4. So as you can see, what went down, we have going back into the New York session, in the pre-market session, I have this inversion fair value gap was inversed, dropped lower. It's marked in red because it was reclaimed here. So I'm having this bullish fair value gap, which was also inversed, giving it a what? A bearish row. So it was inversed, reinversed, used as a bullish fair value gap, reinversed again, making it an inversion fair value gap right there for this current trading for the final hour. So going into the final hour, what timestamps am I looking at? I'm looking at number 1, I'm looking at the macro between 250 to 310. So 250 to 310, I'm having that as my macro, marked out like this. This line is 250, this is 310, so like this, you have something of this sort. If I'm to take this off and this off, this is my macro. So this is 3, so this is 2, sorry, this is 250 to 310. So this is 250 to 310 macro. Go ahead and make that, give it 14, so a little bit bigger, 14, so just like that. So this is my 350 to 310. So I'm having 250 to 310 macro. I'm looking at price action at that. Then I'm also having another macro from 315 to 345. So I'm having 345 marked out, just like that, from 315 to 345. Now these are the things you write down in your notes. So 350 to 345, have to put that away. So 315 going into 345. This is also a macro, give that 18. So I'm having that, and then I'm also having the 357 marked out. So from 357 to 4, this is when, so it's 350 to 357. This is the final hour macro. So this is when I expect the final move to happen after 4 to 4. So this is to 4 p.m. This is when I expect the final move to happen. So I'm having something of this sort. putting this away, this away, and this away. So I'm having it just like that. Now what am I looking at? We have the pre-market session buy side liquidity. It is taken out just like that. Upward momentum driving units, making you think that the market is still continuing higher, but we had left sell side liquidity untouched during the lunch macro. We have these equal lows, we have this low, we have these equal lows right here. So from that, I'm having this candle's low to that candle's high. Apply your optimal trade entry. If I want to apply it just like that. That is my optimal trade entry fib. As you can see, I'm having symmetrical price, having my first profit target, first profit scaling, second profit scaling. I don't need that. So inside this optimal trade entry, I have a fair value gap from this volume imbalance to this volume imbalance and a breaker. So I have from this candle's low to this candle's high. As you all know, our model for the optimal trade entry, I'm having something of this sort. So from this candle's low to the high, then my fib levels right there. So this is what I have here, from this candle's low to this candle's high, then my optimal trade entry levels. I'm not taking this fair value gap. I expect the market to come back into this sweet spot. This is not a breakout gap. This is used as a bearish fair value gap, and my optimal trade entry, as you can see, it is just to the tick. So if this was your first execution right there, how can I mark this? I need an arrow. So if that was your first execution, right there at that candle's high, when it crossed that, we have low risk sell, will drop lower, leaving a wick. So a wick that retests into this is an order block. So I have an order block right there, and note that all this is happening within our time window, which is the macro. So I'm having a bearish order block right there, just like that. Make this, that is a bearish order block. Let me set this as my template. Save as bearish order block. Okay, so I'm having that bearish order block. We'll come back one more time, give you that tap, second entry, we drop lower. We'll have a wick right here. You drop lower, fail to reach consequent encroachment, we rally back higher into these volume imbalances right here. So this is a PDR, this volume imbalance and this volume imbalance, that can be used as a range. So we have that, we drop lower again, the bodies respect consequent encroachment of this week, we rally back higher, we have a volume imbalance right there. If I'm to zoom in for you, we are looking at this range right there. So I have, if this was your entry, first entry, second entry at that, we drop lower, bodies respect this fair value gap coming into this one, but the bodies respect this, we drop lower into that wick, rally higher into these volume imbalances right there. If I'm to mark them just like that, volume imbalances have room for error. That's why I'm not looking at this consequent encroachment. I have This has a volume imbalance right there. As you can see, consequent encroachment is respected. This is the market went and closed above half of the volume imbalances here. What did the market do after that? It corrected with the new volume imbalance, retested into consequent encroachment. This volume imbalance, if this candle's body was also above this, there wouldn't be a correction, and I would expect this to first fail and then market drop lower into it. But the market corrected. We drop lower, giving a volume imbalance. Come back into that one more time. We drop lower half of this week. It fails. The body is respect. It fails to allow the market to pass, to form our breaker. Then we rally back higher into this. This is a strong volume imbalance. We drop lower again, fail again. The moment when do you know that now the market is going? We are starting to spool. When do you need speed? The moment we close below that. Close below that, come back higher into this candle one more time. Then after that we drop. Disrespect the lower quadrant. The bodies hover above that. Come back into the upper quadrant. Fuck. This network is so fucked up. My network is fucked up, but we come back into the upper quadrant and then we drop lower into this reclaim fair value gap. What is this? Time distortion going into the 315 macro. 315 macro opens up, the market starts to run. Market starts to run into the 315 macro. We drop lower coming into this reclaim fair value gap. We have to spend some time here. Come back into this week. The wicks do the damage, the bodies respect. Wicks do the damage, we remain below that half of that wick. This is the strongest part of it. We remain below, we drop lower, forming our order block. Go back higher, remain below. We do not go above this high that forms the order block. So we have multiple candles. This is an order block. We respect this high, we do not go above it. We drop lower again. This is main threshold, half of this order block. Main threshold, close below that again. I do not expect the market to rally back higher into this. Now we leave that. Coming into the fair value gap I showed you, that was in the 9:30 trading. We drop. This is all in the 315 macro, as you can see. If I'm to use this, that's 315 right there. 315 comes when closes when the market has gone below the speed area. We retest into that. 315 closes. 345 closes. 346 retest into that inversion fair value gap. We drop, forming a new fair value gap. During the fair value gap, we take in the volume imbalance, come back, consequent encroachment, bodies come into this week. How far can the market manipulate above this fair value gap, this balance price range? Market comes there, giving you a model. Which timestamp are we going in? We have 350 to 357. So 350, that 7-minute time window, we need the market to run. We have manipulation, we manipulate higher, drop lower, come back one more time to constant encroachment, we drop lower. 357, we retest, fail to reach the bottom of the fair value gap. One more manipulation, we spool, going into liquidity. Then 4 opens up when we are hunting for liquidity. And then after 4, what happens? We accumulate, going into the close. Isn't that beautiful? Price action 101. So this would be your exit, right? The exit would be right there. that would be your exit right there, that candle. Yeah, so that is it. That's the final hour trading. We have 250, 310, 315, 345, 350, 357 going into 357. We expect a big move going to our objectives. So thank you for watching. Stay tuned for more.